Well, good evening, all. Ira Epstein, and here we are for Wednesday, the 17th of December, 2025, and we're getting on about 6:50 p.m. Central Time. It's been quite a day in the markets, been quite a day for me. We're still hooking up the office, and we're making headway in big ways. And, in the stock market, what's leading me to this is people are throwing in the towel on some of these companies in the AI and GPTs and all. I'm not buying into that at all. I think we're just getting a correction, a needed one, and that nothing has really changed and the fundamentals are actually in good shape. And speaking of that, here's something that we have to look at. Tomorrow we get the jobless claims. We're looking for about 11,000 less. We'll see what goes on here, 11,000 in new claims. We're looking at the November consumer CPI coming out. And overall, if you look at these numbers, they're looking for a 3% gain when you go on annualized terms and a 0.3% gain when you go on monthly terms. Now, the problem for that is two parts. Number one, a good problem is that inflation's not running to the upside. So 3% isn't 2%, but it's also not running. On the other hand, the Fed will have to say they're not winning their battle. On the other hand, from that, we know that the market is concerned, or the Fed is concerned is the right grammar, that the jobs market is weakening. So their attention is fixated on what do they do to keep the jobs going. So if you get the numbers is what I'm coming to in the CPI and right where they're at, I don't see that as being a set of numbers that'll be bearish for the market. I think people will say, well, the Fed's not going to change its overall plan to lower interest rates because of the jobs market. That's what I'm seeing in a nutshell. We're going to get the KC Fed manufacturing composite and business activity indices. They'll come out at 10, and we'll get the natural gas storage report also at 9:30. As for what the market seems to be doing in the energy markets, the president is threatening Maduro in Venezuela. He's asking U.S. companies, would they be interested in going back if Maduro were out into Venezuela to produce oil again, things of that nature. So the intimidation from the U.S. is in full swing. I can't go any longer by what a correction means in metals, because when silver moves $3-4 a day an ounce, you throw all that out the window. In the foreign currency markets, it seems to me that they've gone stale. I think that's the right word. They want to see what the CPI does. They want to see how the markets are going to react to it. And from there, the markets might come alive. The word is might. We have also central bank meetings. You're going to have the European Central Bank tomorrow. We have the Bank of England tomorrow, and then we have the Japanese Central Bank on Friday. So you have a lot of monetary decisions that are going to come out in the marketplace, and I think we want to be prepared for all that. So just a point of reference as to how I'm working with that. So let's take a look and see what we've got. If the S&P breaks, I'm looking for support at 66.99, the 18-day moving average of closes. Assuming that the market keeps this pattern and doesn't break below here, you still have a shoulder, and a head. If the market clears this high, I see nothing to stop it from making a run into the low 72 to 7,400 range. In terms of the current trend, the swing line is down. In other words, you have lower highs, lower lows in the market. The market has gotten under today the first time in a while the 18-day average of closes. It might be wanting to head to either the 100-day average or the Bollinger Band. Since the Bollinger Band's above it, this is the logical first support. And literally, you're right there in a market that is very oversold. When does the Santa Claus rally typically take place? About 4 business days before Christmas. So that opens the door for next week. And in theory, it runs from then until the first 2 days of business days of the new year. So we will find out if that's going to happen. In the NASDAQ, you're right at the support zone. So if you were sitting next to me and you were short and you asked me what to do, I'd be saying cover shorts. In the Dow, The bulls are still in control. It is not broken under the 18-day average, hasn't closed under it. You've gotten rid of the overbought condition. The bias is still up. The swing line is up. Momentum is what's pointing down. You need to flip that around. In the Russell, this is your first challenge of the 100-day average. It's about where I think the market's going to try to find some support. And in the DAX, you lost today for the first time your bullish embedded reading. So win, lose, or draw, I think the pros came out today on the close. I think it wouldn't surprise me if you got down to the 100 and the 18-day average and tried to regroup from that point. As we look at the bonds, you can see that they have been fighting a battle at the 100-day average. They were running for, back here about a week ago, the lower band. They've given up on that, and they've come up here, and they're still in a lot of resistance, and they are still in an oversold condition. In the 2-year note, not the same game. Market got and stayed above both the 100-day average and the 18. I think the pro money is buying the 2-year, selling the 10, and I know I'm a broken record because I keep saying that to you each and every day, but it's basically what I'm saying. In the dollar index, I think today ended the downtrend on this leg. That doesn't mean it can't start again somewhere, but I think today with the loss of the embedded readings now, you lost it if you take a look, not yesterday, but today, even with the market there. So I'm viewing the market. Here is the close of business today. You need to have a close under 21. You have it. Let me say it the right way. Over 21. I said that wrong. And you didn't have it. I think it's doing it today. In other words, we'll know if the embedded reading is lost on the reaction to the CPI numbers. In the eurocurrency, here you are losing the embedded reading. Again, let's go to the close of business right here. Did you close under 79 because you've been bullish? That's what you'd have to close under. No, but you're losing it tonight. So they're flip-flopping, but neither have lost their embedded readings. Tomorrow will be the determining factor. Where's the Japanese yen? Well, it's at the red line, the 18-day average, neutral going into Friday's report, but an overall uptrend. Bitcoin is still bearish. I said yesterday it might want to make a run for the 85,000 level, and you missed it by about $300. That's not too bad. On the energies, this rally is welcome. The market did not get what I call a true number that it's living with for the breakout. It stayed there on the Bollinger Band. You had one day where it tried to break out, and it came back today off of all this news. But this is a supply shock, and it's not a big one, a supply shock rally, which means the market won't last on it, in my opinion. You need a demand shock to hurt the market, and you're not getting that. In heating oil, trying to come up here and play its game, and I don't see much going on there. And in natural gas, your wintertime, you can get rallies at any point, but you still have a very bearish picture. With that, I'm Ira Epstein. Be certain to move your cursor up to the top here. Take a look at our free offers. I think you'll find them pretty interesting. You have yourself a great day.